In this video, we'll take a look at some financial accounting questions related to debits and credits. Now, this video is meant for students in their first accounting class and is a great way to review for an upcoming test. I'm Scott Meister, and this is Test Prep Episode 2. The first question reads, the left side of an account increases the account balance, decreases the account balance, is the debit side of the account, is the credit side of the account. So we'll just take a look. We're looking at left side, and in some instances it could increase the account balance, but also in other instances it may decrease the account balance. So item A and item B probably aren't our best choice just because we don't know what type of an account this is. And depending on the type of account, it could increase or decrease the account balance. Next, we want to look at, is it a debit or a credit? Well, whenever we do a T account, we always put the debit on the left, and we always put the credit on the right. Similarly, when we do a journal entry, we are going to put the debit first, and that is going to be to the left, and we are going to put our credits next, and we are going to indent those, and those are to the right. So you can kind of see here that debits are always to the left, and then credits are always to the right. So our answer here is going to be C. Next, debiting an asset account has no effect on the account balance, decreases the account balance, increases the account balance, or none of the above. So anytime we're looking at debiting, we need to figure out, is it an increase or a decrease? And we need to figure out what account type is it? Well, they give us debiting and asset. And whenever we debit an asset, that is going to increase the account balance. And the way that we can look at this is we've got assets, we've got expenses, and we've got dividends or drawings. And to increase those accounts, we need to debit them. To decrease them, we need to credit them. And then we could also go through the other side. And the other side is going to be our liabilities, our owner's equity or our stockholder's equity. And we also have our revenue is going to be the opposite of this information here. So that would be a debit is going to decrease those, and a credit is going to increase those. So for question 2 then, debiting an asset increases the account balance. For the next question, it says, a credit is not the normal balance for which of the following accounts? And so what we want to do here is we're looking for the normal balance, but we're also looking for this word here, not. Well, a credit is a normal balance for the capital account. A credit is a normal balance for notes payable. And a credit is a normal balance for accounts payable. And the reason I know that is I can reference this information up here again. And I can see that this is a liability. It says payable, so that means it's a liability. This is a liability, again, payable. And capital, that is an owner's equity account. So I know that those all have a normal balance of a credit. And the reason it's a normal balance is because the normal balance is going to increase the account balance. And you can see here, I put up here, a credit increases the balance of the account. And that's for a liability, owner equity, and a revenue account. So by default then, the answer is going to be B. And rent expense, you see we put that over here. Rent expense is an expense, and the normal balance is a debit. So we increase that balance by debiting it. For the next question, it states, for all transactions, the double entry bookkeeping system requires that the total amount of debits must equal the total amount of credits, total number of debits must equal the total number of credits, total assets must equal total liabilities. Total assets must be debited because a debit is the normal balance of an asset account. So for this, we're looking at the double entry bookkeeping system. This could also be called the double entry system or double entry accounting system. There's kind of multiple names. They all mean the same thing, but it's double entry system of some sort. Really what you're looking for here is that the amount of the debits must equal the total amount of the credits. So if you had 2 debits equaling $200, well then you have to have at least 1 credit equaling 200 or multiple credits totaling $200. So that's what this means. Total number of debits and total number of credits, that's just referring to if you had 2 debit accounts, then you must have 2 credit accounts. That's not the case. And then as far as total assets must equal total liabilities, that doesn't make any sense. Total assets must be debited because a debit is the normal balance of an asset. Well, a debit is the normal balance of an asset, but assets don't have to be debited. Assets could be credited, so that one doesn't fit either. So the answer then is A. All right, for question 5, it states, if the accounts payable has debit amounts totaling $5,000 and credit amounts totaling $6,000, the accounts payable balance is a $6,000 debit balance, a $6,000 credit balance, a $1,000 debit balance, a $1,000 credit balance. So one of the easiest ways to solve something like this is to just do a T account. And we're going to put in here accounts payable. And it says here it has debits of $5,000. So we're going to put our debits on our left. So we'll just put $5,000. And it says credits of $6,000. And then we can just draw a line here and we can total these. So we have more credits. And I'm going to put credit up here and I'll put debit up here. We have more credits than we do debits. So what we do then is we reduce our credits by our debits. And when we do that, it's going to be the $6,000 reduced by the $5,000 in debits. And that's going to leave us with $1,000 in our credit column. So the answer then is going to be D. The next question states, debits are used to increase liabilities, decrease expenses, increase assets, increase owner's equity. So for this question, I'm just going to go ahead and draw out what I drew up above. I've got my assets, my expenses, and my dividends or drawings. And I know that a debit is going to increase those. So that's what we're looking for here. I know that my liabilities, my owner's equity, and my revenue, a debit is going to decrease those. So now I'm looking at my list that I just drew out, and I know that this one is wrong because a debit is going to decrease liabilities, so that's wrong. I know that a debit is going to increase my expenses, so this one is wrong. I know that a debit is going to increase my assets, so this one is correct. And I know that a debit is going to decrease my owner's equity, so this one is wrong. So the answer here then is going to be C. For the next question, it states, which of the following account types have credits as normal balances? And I'm going to go ahead and draw out the credit side of the list. So my credits are going to increase, and that's what the normal balance means, when I have a liability, an owner's equity account, or a revenue account. So that's my credit, that's going to increase, and that's what the normal balance is. So I've got liabilities and revenues, and I've got liabilities and revenues, so it's answer A. It's not going to be assets and expenses because those are going to have normal balances of debits. Liabilities is correct, but expenses is wrong. And assets is incorrect, and revenues is correct. So the answer then is going to be answer A. So for the next question, it states, to record when a customer owes you money, you should debit accounts payable, credit accounts payable, debit accounts receivable, or credit accounts receivable. Well, when a customer owes you money, that is an asset. We need to make sure that we increase our assets because somebody owes us money. This is a liability. This is a liability. So those are not correct. So our selection here is going to be either C or D. And if somebody owes us money, like I said, that's an asset, and our balance went up. So in order to increase the balance of an asset account, we need to debit our asset account. So we're going to debit our asset account, and in this instance, accounts receivable, that represents money that somebody owes us, and we're going to increase that, so we need to C, debit accounts receivable. For the next question, it states, an incomplete transaction has a debit to an asset account for $12,000 and a credit to a liability account for $15,000. To complete the transaction, you would debit a liability account for $25,000, debit an asset account for $25,000, debit an asset account for $3,000, or credit a liability account for $3,000. So what I'm going to do here is just put in my debits and my credits. And I've got $12,000 here for my asset, and I've got $15,000 here for my liability. So the difference between these two is going to be $3,000. And what I need to do is I need to debit some type of an account for $3,000. So right now I know it's not $25,000, so I can mark those out. And now I'm stuck between C and D, and I need to debit an account for $3,000 in order to get my total debits to match my total credits. I know that it's not D, so it has to be C. So I'm going to debit an asset account for $3,000. So when I debit something $3,000, I add the $12,000 plus the $3,000 to get me my $15,000. And the credit side already has $15,000, so my debits equal my credits. Okay, the next question states, normal balances are stated as follows. Assets debit, liabilities credit, owner's equity credit, revenues debit, and expenses credit. Assets debit, liabilities credit, owner's equity credit, revenues credit, and expenses debit. Assets credit, liabilities debit, owner's equity debit, revenues credit, and expenses debit, or assets credit, liabilities debit, owner's equity debit, revenues debit, and expenses credit. So what we're going to do is go through and start marking these off as best we can. So what I'm going to do is go ahead and create that chart that I had before, where I said assets, expenses, and dividends. And these are going to be normal balances that are debits, because when you debit these accounts, the account balances increase. Next, I'm going to do liabilities, owner's equity, and revenues. And credits are going to increase these balances, so the credit is a normal balance of these accounts. So I'm going to look at debits for assets, so it could be these two, and I know that these are wrong because it's listing assets as credits as the normal balances. So next what I'm going to do is go through and read the first one, assets debit, yep. Liabilities credit, yep. Owner's equity credit, yes. Revenues debit, no, so this is wrong. And expenses credit, and that's wrong as well. So the answer here is going to be B. It's going to be assets debit, yes. Liabilities credit, yes. Owner's equity credit, yes. Revenues credit, yes. And expenses debit. So that is correct. The next question states, which of the following is not true? Debit is the left side of an account and credit is the right side of the account. Debits increase in account balance and credits decrease in account balance. Debit is abbreviated as DR and credit is abbreviated as CR. So we're looking for the statement that is not true. Well, just based on all the information that we've been working through already, you can see that debit is abbreviated as DR and credit is abbreviated as CR. So these are correct. So these are not the answer we're looking for. So then it's in between A and B. And for A and B, debit is the left side of the account and credit is the right side of the account. That's correct as well. So that's not the answer we're looking for. So let's look at B. Debits increase in account balance and credits decrease in account balance. So this statement is not true because debits might increase an account balance and credits might decrease an account balance. It just depends on the account type. So we're going to go ahead and go with answer B as the not true statement. And for the final question, it states, fill out the table below by indicating if the account balance increases or decreases with a debit, increases or decreases with a credit, and if the normal balance is a debit or a credit. So anytime you see a question like this, when you're asked to determine the normal balance is always going to be what increases the account. So depending on what you answer in the first column, debit, or the second column, credit, wherever the plus symbol is, that is going to mirror your normal balance column. So for cash, cash is an asset. We increase the balance of cash by debiting it. So that's going to be plus. By default, then, we are going to reduce the balance of cash by crediting it. So the normal balance, then, is going to be a debit. Accounts payable, whenever you see payable, that means it's a liability. A liability is going to have a normal balance of a credit. So we're going to increase the balance of a liability by crediting it, which means we're going to decrease the balance of a liability by debiting it. So the normal balance here is going to be a credit. Advertising expense, that's an expense account. The normal balance of an expense account is a debit. So we are going to increase the balance of an expense account by debiting it, which means we're going to decrease the balance by crediting it. And the normal balance here, as I stated, is a debit. Service revenue, that's a revenue account. We increase the balance by crediting it. So we're going to put a plus symbol here for the credit, which means we're going to decrease that balance by debiting it. So the normal balance then is a credit. An Angela Brown Capital, that's going to be an owner's equity account. and we increase the balance of a capital account or an owner's equity account by crediting it, and we're going to then decrease the balance by debiting it. So the normal balance is a credit. That's it for this episode. Make sure you give this video a thumbs up if you liked it, ask questions or leave comments if you have them, subscribe to my channel for more financial accounting videos, and ring the bell to be notified when new videos come out. Additionally, check out the link in the description for my website, passaccountingclass.com. It's a great resource for accounting and non-accounting students that need to pass their accounting class. It has more videos on similar topics, a message board where you can ask me your questions, and discounted rates on one-on-one tutoring with me. I tutor students across the U.S. using web conferencing tools, and I help my students succeed. I'm here to help, so if you have any questions, feel free to reach out. Thanks for watching.